My name is Anthony Fatsis, and welcome to the What the Finance podcast, where we interview finance, trading, and investing experts to help you understand current market trends and learn about the intricacies of new and existing assets. If you enjoy the podcast and to help with the YouTube algorithm, please like, comment, and subscribe. It really helps with the podcast. That means we can continue to get amazing guests. Thanks again. I hope you enjoy. Dominik, thank you so much for joining the What the Finance podcast to talk with me today. So sort of on to my first question, what would you say are the benefits of holding, crypto in people's portfolio?
Yeah, I think what has been shown over the past, let's say, decade, roughly since Bitcoin came into existence, is that especially Bitcoin, because it has the longest standing track record of any digital asset, can be beneficial to your portfolio when you add it, let's say, from a 0.5% allocation up to, if you want to be really aggressive, 5-10% allocation of your portfolio. That it can be beneficial, first of all, on your portfolio standard deviation, then on your Sharpe ratio, and of course, as an asset that has appreciated roughly 200% every year on average, that it is beneficial to your annualized returns or cumulative returns, portfolio returns, whatever you want to look at.
Yeah, definitely. And I think, as you said, it really depends on sort of the risk that the person or the institution wants to take, doesn't it? Depending on how much to allocate.
Exactly. I mean, many people have already written about the portfolio effect of adding Bitcoin to your portfolio. And I think still looking at it today, if you add just a tiny percentage of a multi-asset portfolio into Bitcoin, then you have the optionality of an asymmetric return profile. And let's say even you add 0.5% of that portfolio to Bitcoin, what do you stand to lose versus what do you stand to gain? And not only in terms of return, that is of course the nice thing, but Bitcoin specifically has been a decorrelating asset. So if you look at the correlation history versus traditional asset classes, has basically a zero correlation or partly even negative correlation to these asset classes, which of course, helps you balance out this portfolio that you are managing.
Yeah, definitely. And then you sort of mentioned Bitcoin there, but obviously there's a few other cryptos like Ethereum, Cardano, Solana. Do you think they're so correlated that someone doesn't have to really diversify between them all,
or? So I mean, in terms of or in times of crises, basically we've seen that in the past that correlation tends towards one. But if there's no crisis, then you can achieve further diversification by adding other crypto to your portfolio, maybe through a basket approach, adding crypto in a market weighted manner to your portfolio could be beneficial.
Yeah, definitely. And sort of my next question is talking about sort of the network effects that we see with blockchains and cryptos that have smart contracts involved with them. Because you see a lot of there's staking involved, and that takes a lot of the actual cryptos off the market, which then reduces supply and potentially increases prices. Such as Ethereum, Cardano, and Solana. Do you sort of see that as potentially a something that will majorly help with the appreciation of price for these assets?
Depends a bit, I would say. Of course, tokenomics are very, very important in terms of investing into this asset, and staking these assets. Like you said, obviously they can reduce supply to a certain or liquid supply to a certain amount that it will help the price appreciation. But I think more the interesting part that would drive the price is actually adoption of these smart contract platforms. You see it with the chains that you mentioned, Ethereum, Polkadot, Solana. When you when you basically drive adoption of these smart contract platforms, what it does to the price of these assets.
Yeah, definitely. I guess it's something that we've seen the past few years. It's just been so much building sort of behind the scenes of products that people can adopt, and then that's sort of beneficial for the whole ecosystem, isn't it?
Yeah, for sure. And yeah, I think the best example in the past year is Ethereum, where like just this hype around certain upgrades and throughput capabilities have driven the price dramatically, or Solana in the past couple of weeks. So yeah, I think those network effects are very, very important. The network effect actually is important for Bitcoin as well, and not only for Ethereum, or let's say all those smart contract platforms. Like, adoption will bring people to various platforms, and the more people adopt these assets, probably the better it will be for those platforms as well.
Definitely. And I think what we're seeing as well is, obviously, we've seen El Salvador recently adopted as a legal tender, and then institutions are investing as well. And I think that's what people are waiting for. Once you get the big institutions investing, with even if it's just 1 to 5%, that's going to be massive amounts of liquidity, as well as governments.
Yeah, exactly. I think that the strongest investment case is just out there for Bitcoin in terms of digital gold, and that's what we are seeing of the past, let's say, 1.5 years unfolding, ever since MicroStrategy aped into Bitcoin, and then Square, Tesla followed suit, and now it's actually a nation state that is adopting something that has been said of it. It's not money. By various institutions, is actually adopted as money. So that's very, very interesting.
Yeah, and I guess it's one of those things that, the higher the market cap gets, the more money that's going through it, the more transactions, and the more, the less volatile it'll become. And I think that's what people are looking for, isn't it? They're a bit afraid of just the massive volatility that we're seeing. We've even seen it over the past week, where it's gone down quite a lot.
Yeah, but I mean, you can't become a monetary asset overnight, and the adoption curve is not going to be a straight line from 0 to 1. There's going to be pain involved, and massive volatility. And who says it can't fail? Right now, I would say the odds of failing are pretty low, but we see it on a daily basis. Those wild price swings that reflect this uncertainty about adoption, maybe.
Yeah, and that's where, I guess, that's where the risk and reward comes from, isn't it? This volatility is good for if you potentially want to make money in the long term. That's quite good. As you said, it's gone up sort of on average 200% each year, which is crazy to think.
Yeah, exactly. And I mean, also, like I said, price isn't everything, especially if you look in terms of portfolio allocation. You want something that is decorrelating, obviously not something that is going down over the long run, but having this decorrelating asset in your portfolio is very, very important. And if it's just a very small percentage, like I said, 0.5%, just don't make the mistake of not owning crypto.
Yeah, definitely. And so, what would you say are the major differences between crypto and other assets?
You mean in terms of traditional asset classes, or?
Yeah, probably more traditional asset classes.
Yeah, I mean, if you broadly distinguish between something that has an equity right attached to it, and some of these token projects that are out there, where you don't have any equity rights in the projects, but you can influence sort of the network upgrades, or the work that is done around the network via staking, via basically just being involved in a community. So I think that's the major difference, right? You don't have any equity rights attached to a lot of these projects. And if there are equity rights attached, then they are basically security tokens, which probably better reflect equity.
Yeah, definitely. And it's one of those things. It's like rather than we look at fiat currency, it's trust in the in the government, in the systems. Whereas this, crypto is more trust in the decentralization of the system and trust in that, isn't it?
Yeah, and especially open source as well. That things are not done behind closed doors, but actually on GitHub, on Discord, and I think some projects are more open than others, and more decentralized or centralized than others. But I would say broad summary can be that aspect.
Yeah, definitely. And I read an interesting article sort of on your website talking about the impact hash rate has on the Bitcoin prices. I'm not sure if you maybe want to expand on that. And we've seen it. It's quite interesting that, China's apparently finally banned mining, and we've seen the impact that has had on the actual price as well as the hash rate.
Yeah, hash rate is an interesting topic. So there are a couple of studies, right? And it's this hen-egg problem or thought that does price impact hash rate, or does hash rate impact price? And I think an elegant way that I heard was actually on the tail ends. It does influence, like when the hash rate drops massively, which we've seen a couple of months ago in China, then all of a sudden all the other remaining miners are vastly more profitable and would probably be incentivized to expand their hash rate again, which could then drive price again, or the other way around as well. If the price massively spikes, there's a huge incentive for vastly profitable miners to expand their hash rate. So I guess it's to be seen over the long run what really drives what, but that is certainly a very dynamic field, and very interesting, especially in these times, like when China finally basically comes through on the FUD that has been basically said over years, that China bans Bitcoin, and now they are trying to enforce it. I would say good luck with that.
Yeah, I think they're trying to control everything, aren't they, over there at the moment? And it's not looking good with Evergrande as well that's happening. But sort of, you mentioned there, obviously, miners, there has been a bit of concern as well about the energy costs involved. And I'm sure you've heard about that quite a bit. And, there's quite a lot of concern, not just about Bitcoin, but other cryptos as well. Sort of, what's your opinion on that? And do you think it's something that will potentially impact crypto in the future, or will they be able to solve the issue?
I think the ESG narrative in general does have an impact on digital assets, and especially on Bitcoin being the biggest proof of work protocol that's out there. But and I think it's fair if you don't want to fire up your miners with a coal plant, and be responsible for these carbon emissions. But I think the narrative in the media that especially Bitcoin is so dirty, and that that it causes whatever kind of pollution is just a bit exaggerated. And of course, if you look at the energy mix that the Bitcoin mining network is using, then there are some fossil fuels in there, but also Bitcoin mining is using very clean sources of energy, and it can help making basically reduce waste. I think the interesting part about that is there's some natural gas flaring for oil and gas companies, basically across the world, and this flaring is never 100% efficient. And some Bitcoin miners basically just put their miners on top of these basically, or using flared gas to run their Bitcoin mining machines, and thereby increasing the efficiency of this whole oil and gas operation while mining Bitcoin. So it's making a in quotation marks dirty industry cleaner. Or if you look at overcapacities in hydroelectrics, maybe in Canada, or used to be in China this way, that there's a gigantic amount of energy that is being wasted and that Bitcoin miners can use. So I think people need to start looking under the hood before claiming that Bitcoin is inherently, or Bitcoin mining is inherently dirty.
Yeah, definitely. I think, as you said, people have found, very unique and innovative ways to sort of try to make their processes, I guess as cheap as possible, but as efficient as possible. We've seen in Iceland as well. There's lots of people, geothermal energy, which is abundant there, and these countries are coming through because they have very cheap energy, and then they're able to profit so much more than others.
Exactly.
Yeah, and I think one thing that we've seen as well. Is that I read something that the actual financial institutions and the whole banking system around the world uses a large amount more energy than Bitcoin does itself.
Yeah, I have to say I'm not a big fan of saying that something is better just because something else is worse. But I think the comparison is fair, and just because something is presented in a certain way doesn't make it so. And rightfully, like you said, the entire banking system and the energy consumption of that industry is gigantic, but nobody really cares. So maybe it would be good to frame it in a certain way that what's the benefit to a society that a sound money such as Bitcoin contributes, and because nobody's also questioning the use of the internet, which is also causing carbon emissions.
Yeah, I think you look at Google or those companies, the amount of energy they have to use for this, data storage and all that stuff. It's crazy to think.
And nobody questions it. And I think I would even say undoubtedly people would say that the internet and free dissemination of information is a net benefit to the society, like global society, and maybe so is Bitcoin as a form of sound money that is taking away power from the state.
Yeah, definitely. And I think it's something that we've seen the past year, the amount of money that's been printing, you could say these fiat countries, I think they call it dirty float because they just, they print so much money and they're spending so much money, and, there's inflation as well. Whereas you look at Bitcoin, it's something that's, it's immutable. There's just constant, new Bitcoins being released, but it's limited. And I think that's what people like about it. There's control over it. Whereas with fiat country, there's just no fiat currencies. There's no control.
Yeah, nobody says that this I'm going to call it experiment is going to be successful. It's just another model of let's say central banking, because the monetary policy of Bitcoin is just programmatic, right? Limited to 21 million, and the issuance schedule of Bitcoin is well known. Whereas when you compare it to a central bank, then the total supply of euros or dollar of any fiat currency 100 years into the future is not known, and the issuance schedule up to this point in time in the future is also not known. So it's an interesting model, and time will tell whether people like the decentralized model better, or programmatic model better, versus a centralized model as we've seen over the past decades.
Yeah, definitely. And that sort of goes on to my next question. So we've seen quite a lot of regulation and a little bit of concern from governments over the past few years around the world. So what's sort of been your opinion when you've been having to deal with regulators? Have they been sort of endorsing it and happy to help, or have they been a bit concerned about the potential of it?
So from our perspective, what we've had to do, especially that we are not regulated as an entity, but the products that we issue are need the approval of a regulator, and these discussions, when new assets are basically wrapped in these well-known structures, then legally it would be hard for a regulator to basically counter that. But we've seen the discussions have been fruitful, and as you can see over especially like from Iconic's perspective over the past year and a half, how exchanges across the European Union have adopted ETPs on crypto assets, that they are interested in innovation, but it just takes time to bring it together with the old system.
Yeah, from what I've heard, Germany is quite conservative in terms of its, wanting to regulation. I'm not sure if that's true or not.
Yeah, I mean, globally, I would even say that the German financial regulator has quite a good reputation despite its scandals in the past, and I think it's still a stamp of approval if you make it through the BaFin process, which I think holds truth, and at the same time, yeah, I mean, they are not as conservative as one might think. Of course, they want to help innovation, and they want to keep the status of let's say Germany or Frankfurt, or this stamp of approval of BaFin. Keep this reputation high. Yeah.
Yeah, and I think that's quite important. So you mentioned ETPs there, which is obviously a product offered by Iconic. So can you maybe talk a bit more about that, and maybe just mention sort of why have you used ETP compared to potentially other investment mechanisms?
Yeah. So an ETP, or in European terms, a collateralized exchange traded note is the equivalent of an ETF in the US, and due to regulation in Europe, it's not allowed to launch ETFs on single underlying. So you can't launch an ETF just based on Bitcoin, and also crypto assets are currently not eligible for UCITS ETFs, which is the regulation around that. So an ETP basically, or collateralized ETN, is a well-established structure that people know from gold, from commodities, basically in Europe, where to make otherwise inaccessible assets accessible. You could even wrap an old timer or a basket of old timer cars into an ETP and make it accessible to the public. And I think the benefit of such an instrument is that it is investable. It is traded on stock exchanges, Deutsche Börse, etc., Euronext in Paris, in Amsterdam, or in Switzerland, and more exchanges are actually opening up to list these kinds of assets. And for us as an issue of these products, what is really important is this accessibility, right? Investor preferences can be different, like for physical gold, let's say, or for gold investment, you might have a preference for holding it physically in your vault or at home. Someone else might have the preference of just owning paper gold, and so is the so are the preferences for holding Bitcoin. Others may say, not your keys, not your coins, which is not wrong, but some people may have a preference of owning Bitcoin through a so-called wrapper. And we, amongst others, we are giving this wrapper or this opportunity to investors to easily access the digital assets market.
Yeah, definitely. I think, as you said, it provides more opportunity for investors to, to actually invest in the product, because I'm sure there's lots of regulations around what they can actually invest in, and if it's listed on the exchange, it means they can have access to
it. Exactly. Imagine the infrastructure that a big bank may have to build in order to hold only Bitcoin, and then you would have another blockchain engineer if all of a sudden all your clients want to hold I don't know, Tron, and you would have to build it up, right? So I think these vehicles are actually important, despite the fact that the investor doesn't hold the own private key.
Yeah, I'm sure they look at it and they look at the amount of work that's needed, the risks, and they're just like, oh, forget about it. But if they have something like this where they can just, as you said, have it's sort of paper Bitcoin, and that's a good way for them to get exposure.
Exactly. I mean, if my father wanted to invest in Bitcoin, and I would have to explain to him how to open a wallet and store his private key and not expose it to someone, I would go nuts. So for him, it's easy just to go to his bank and say, I want to buy this product. May not be suitable for him from a risk perspective, but he can do it if he wants to.
Yeah, definitely. I know the ETP is sort of more focused at institutions. So, what has sort of been the perspective on crypto and investing in crypto that you've seen?
Yeah, over the past year, I think it has dramatically improved. Especially Bitcoin. Like if you look at the European ETP markets, around $5 billion US dollar in assets under management, and 85%, 90% is Bitcoin and Ethereum. So naturally, like when you want to get into that market, you start to look at the 400 pound gorilla, which is Bitcoin, and then you may get exposure to that first. So in terms of adoption, and like I said in the beginning, also Bitcoin is the asset with the clearest investment proposition, I would say, longest track record, and a clear proposition as digital gold. And I think that's what's appealing to institutional investors, with all the properties that we mentioned before, as a portfolio asset, what it can do or contribute to your portfolio. I think those are all things that drive institutional adoption of that.
Yeah, definitely. And have there been any concerns that people have had, like institutions have had about it? I'm sure you've heard.
Yeah, for sure. I mean, they are cautious, and they have every right to be cautious, because it's a new emerging asset class, and if you start offering that to your clients in the end as an institutional investor, you want to be sure that you're not betting on the wrong horse. So yeah, they are cautious, but they are slowly opening up. And the good thing is, their clients are asking about getting exposure to digital assets, whether that's Bitcoin, Ethereum, or any other digital asset. And through client demand, they are forced to to start digging into this and look at possibilities to offer it to their clients, so they turn around and come to, for instance, us or some other company that's offering similar products.
Yeah, definitely. As you said, they sort of vote with their wallet. So say if they, if that company doesn't offer it, but someone else does, they might move, and then that's
Exactly.
where it really comes from.
Exactly. These days, it's a risk if you're not involved in that space. Clients can easily move. Actually, with all these neo banks, it's super easy. Within 35 minutes, you have your bank account opened, or you have your brokerage account open, and you can start trading. And I think that's a threat. So you have to be flexible as a bank.
Yeah, everything's changing so quickly as well. And so sort of where do you see like the next few years going in terms of with this, and I guess with Iconic as well? So I guess you might offer ETPs and other assets, but is there any other innovation that you can sort of provide?
I think the crypto space is really interesting in terms of yield that you can achieve on, let's say, just by staking an asset or by lending an asset, and especially if you look at outside of crypto, what the interest rate environment looks like everywhere else, and what it looks like within crypto. I think you can spin your head around so many interesting possibilities, whether they will fruit in a product or not. But that's the exciting thing about this industry, is that there are so many things to innovate around, and present something to clients that may actually improve their ability to save, their ability to save for the future.
Yeah, definitely. And as you said, you look at Germany and other European countries, the yield on bonds is negative. So,
exactly.
I guess a lot of these institutions will soon start to look for, greater yields. And that comes from, as you said, staking and other things involved in crypto.
I mean, we are still very, very far away from that point where, I don't know, a client walks into the bank and speaks to his private wealth manager, who how he can stake his Polkadot or his Cardano to generate yield, and maybe do it in a market neutral way. But I think if you can innovate around these things, then that's one way to look into the future. But I think, like, educational wise, we are still a long way out until this is happening and well established.
Yeah, I think we saw in the US, Coinbase, they were trying to do like a loan system or something similar, and then they were shut down by the SEC. So I guess they're still, I think, as you said, we're still probably quite far away from it being legal in a regulatory standpoint as well.
Yeah, exactly. I mean, I don't play baseball, and but I think the reference to, like, we're early in the first inning is maybe already too far fetched. Maybe we're even pre-game or something.
Yeah, and that's what everyone, they all say that, don't they, about crypto, about NFTs, about everything. We're still early, and it's true. I think I saw the other day that there was only 70 million active wallets in a day, and you think there's almost 8 billion people, so it's a lot less than 1%, 0.01% of people actually using it every single day in the world. So the ability to be able to scale that will be where the growth comes from.
Yeah, and like this whole perspective on digitization, or that Africa, for instance, just skipped the landlines for telephones entirely, and they are operating entirely on mobile. So what happens if a country there, or if the entire continent wakes up to the possibilities that you can do in digital assets? That's or South America or Central Latin America, that the growth perspectives there are fantastic or outrageous.
Yeah, and I think we've seen in Venezuela as well. You look at it, like, in Argentina, these countries, they need it because, their asset in their currency is appreciating. I think it's like 20,000% or something ridiculous like that
Yeah.
every single year. So if they have it
Yeah.
in crypto, it just, even though it's volatile, it's a lot less volatile than their actual currency.
Or just being able to save in stable coins,
Yeah.
which would also dramatically improve their ability to save and build wealth.
Yeah, definitely. So what would you say is sort of the greatest risks of potentially, crypto adoption in the next few years?
I think regulatory risk is still high, even though the genie is out of the bottle, right? And the benefit of most of these projects is that they are open source and I would say basically protected under free speech. So I think a regulator will have a very hard time going after these protocols, but they may have it easier going after participants of the network that are basically out there in the open, like miners or validators for some proof of stake chains. I think getting sensible projects off the ground, like you mentioned NFTs. That's nice. That's a niche case, but it's probably not going to affect the 8 billion people that you mentioned so sustainably. And I think adoption there is a risk as well. Like, you have to be able to offer products that a lot of people need, and someone has to build them. So, but I'm quite positive actually. Like in this way, and especially in this industry, there are so many creative minds and very intelligent people who just build. I think El Salvador is a fantastic example of Lightning, Alan Strike. So
yeah, I've noticed that it sort of attracts almost the brightest minds because they just find it so interesting, I think, don't they?
Yeah, exactly.
Perfect. Before as well, you mentioned sort of that you see it's not really correlated to traditional markets. Would you say that you think that's still true? Because we have seen sort of yesterday, market went down, Bitcoin went down. I know in March as well, last year, had a massive crash, then boosted up as well, similar to the market. So do you think it's still a bit, it's not exactly correlated to traditional markets?
The shorter the time frame you look at, the more correlated to traditional assets the crypto markets are. So, but when you step back and you look at it over a multi-year horizon, then it starts to get less and less correlated to these traditional asset classes. I think with institutional adoption of these assets, like structurally, the correlation will probably increase, but too early to say whether that's going to be in the mid digits or where it goes and how it will be really correlated. But what we've seen yesterday or even in March last year is that crypto assets are risk assets, and despite that, Bitcoin is framed as digital gold or superior savings technology, superior money, or superior store of value. It is still a risk asset, but it takes us back to the point that you mentioned before. You can't become a store of value overnight, and the path to this store of value is basically paved with volatility. So that's okay. It's just important that the long-term promises basically hold, and especially for Bitcoin, we know that the monetary policy doesn't alter just because markets drop 10, 15, 40% in minutes, whereas this might not hold true for traditional asset classes where central banks might get panicked and start thinking about the impact of the wealth effect on people, and then start printing money again.
Yeah, and I think we've seen that sort of. So it's the same in equities as well. We're seeing, all these companies are really focusing on the future, aren't they? They're focusing on the growth opportunities. They're looking 5-10 years in the future. What companies are going to be the biggest and the best? And it's sort of similar to why crypto is so, I guess popular for them, isn't it?
Yeah, yeah. And which problems does crypto solve for humanity?
Yeah, definitely. That's huge. So, Dominik, thank you so much for joining the What the Finance podcast today. So, it's sort of on to my last question. What is one message you'd like our listeners to take away from our talk?
No, I think it's just important if you take a look at digital assets that you educate yourself. I think there's whichever rabbit hole you jump in, it's very, very deep, and you'll find something that fascinates you. I mean, maybe to add a bit to my background, right? I came for the gains a few years ago, and all of a sudden I realized how impactful this can be, and how many points in life digital assets touch, and things that I haven't thought about it before. So I think that's an important takeaway. Just dig into it, and stay where you think you'll learn the most.
Yeah, definitely. I would definitely recommend reading first, and then I made the mistake of jumping in. I think it was when Bitcoin went from 6K to 3K overnight. So that wasn't it wasn't a fun experience. But yeah, Dominik, as I said, thank you so much. If anyone wants to sort of talk to you a bit more about this or learn more about what you do, where would the best places for that be?
So yeah, you can find me on LinkedIn, my first name, last name. You can also find me under a very unconventional name on Twitter. It's @SirBanks-a-lot, but you can also find me under my real name there. So yeah, if you just want to interact, reach out. Always happy to talk crypto.
All right, perfect. Dominik, thanks again.
Thank you, Anthony.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.